Time for a quick market review to see where stock prices are headed. As always, we got our research from Macro Ops, our global macro research and consulting firm. So right now we're looking for an acceleration in the buy climax in the NASDAQ. The measured move target is 15,770, and that's a little over 4.5% from current prices. And you guys remember the buy climax thesis. We're going to have prices pop over their range and then turn around, and we might have a correction for 2 to 3 months. And when I say correction, I mean a down move of 10 to 20% and then some sideways action before the major bull market continues. So short term, buy climax, right? Prices are going to head higher. Intermediate term, they are going to correct and then move sideways for a number of months. And then longer term, back to this massive bull market. Time frames is always very important when you're doing analysis because depending on your strategy, you got to know whether to buy or sell, right? The Dow Transportation Index has broken out of its 3-month pullback, which is another bullish sign. We've also had the widening in junk bond spreads take a bit of a pause. So this chart right here tracks the rate of change in junk credit spreads, the 1-month rate of change. So when it's going above this red line here, like we've talked about in previous weeks, that's a bad sign for the markets because credit markets actually lead equity markets. Now that it's calming down a bit though, see it's fallen below this red horizontal line, that is good for stocks. So this should provide some relief to risk assets, giving more fuel to the buy climax that we're waiting for. Macro Charts recently posted on Twitter that ETF flows are extremely crowded right now. Everyone has rushed back into bonds, tech, and defensives. So they capitulated on cyclical stocks. And this is the complete opposite of Q1, right? Now this cyclical rotation could trigger another violent unwind, which would create a big buying opportunity in Q3 and Q4, so be prepared. VIX futures, which is, the Volatility Index, they've put in 8 consecutive bear bars. So there's only been 4 other instances over the last 25 years where this has happened, and each one ended with a higher VIX 8 days later. So you guys know how markets work, right? Low volatility usually leads to high volatility. It's just a back and forth cycle like this. One market that many aren't talking about is India, the Nifty 50. It has one of the strongest charts at the moment. You can see right here that it recently broke out of a tight 2-month sideways regime, and now it's stair-stepping higher, which is a great time to get long. And again, this is how markets move, right? This is another example, compression and expansion. Now from this compression, you didn't actually know which way the market was going to break out. I mean, you might have some fundamental analysis behind that, but you don't actually know until it breaks out. In this case, it broke out higher. So now you can expect to see a trend for a bit. And those trends is where you can make some good money. Gold tested the bottom of its 12-month bull wedge last week. And what happened, as you can see here with this long wick, the bulls came in and drove precious metals back up in a major reversal. So that's a very bullish sign here. Because again, this is a compression, right? This triangle. And what we're trying to see is, will it break higher or lower? And when it goes and tries to break lower, like it did on this bar, and then gets thrown back up, that is a bullish sign. That means there is a strong support here. So the odds go more in favor of this thing breaking higher over time than lower. So as we say here, it would be a bullish sign if gold can hold strong into the end of the month. And this volatility that precious metals are experiencing is helping shake out the crowded long positioning because there is too many people long. So that's setting it up for the next major leg higher. Remember, when it comes to sentiment, we kind of don't want people all super positive and super bullish. So a bit of volatility in a compression regime and some sideways movement shakes out all those people that are long so that only the strong hands remain, and then, the rest of these people can come back in too. Speculative positioning in precious metals is finally back below the 80th percentile for both gold and silver. Again, another good sign because you don't want people too bullish for a bull trend to continue. Palladium in particular is in its tightest compression range since October 2018. And as we talked about, compressions lead to expansions. And the last time palladium was this compressed, it preceded a major reacceleration of its longer term bullish trend. So we might get a run here. Definitely something to keep on your watch list if you trade metals. Natural gas is another one that we track, and we've been bulls over the last year, but the intermediate trend is showing signs of exhaustion. So we have it in an SQN rating of 2.5, which is a level that's only been seen 7 other times over the last 25 years. So when we get a reading like that, natural gas is traded lower over the following 30 trading days each, and every time with an average loss of 18%. So not looking good in the intermediate term. With that said though, over the short term, the very short term, it is oversold, and it's bumping up against its lower Bollinger Band. So our backtester shows there is strong upward bias over the next 10 days. So look for a bounce before the sell-off. And this is a cool dashboard that we have in the Macro Ops Collective now. All our members are able to do back tests. Great little tool because Bloomberg is kind of clunky. It's definitely expensive, and it just doesn't do what you want it to do. do, so we're building our own. And our guys seem to love it so far, so good news. Another market we're watching is the Mexican peso. It's in its tightest compression regime in a few years, and yield momentum as marked by our yield oscillator has shifted greatly in favor of a stronger peso. So if you trade currencies, make sure you look there. And that's pretty much it for the review. I mean, markets are very boring right now. There is very little volatility. So what I would suggest is that you stop looking at markets and stop watching YouTube and just go outside, enjoy the rest of the summer before the Delta variant kicks in. Well, it's already kicked in, but before we might have to shut things down again, I hope not. You never know though, so enjoy the time that you have now. And if you want to put your investing on autopilot, make sure you check out our free training for how to do that, because that's what I'm doing. That's what most of our Fallible members are doing as well. There'll be a link to this training to teach you how to do it in this video and down below in the description and comments. Definitely check it out. Makes life a lot easier because you don't have to worry about all this stuff. You can be outside. So again, that link is right here. Click on it, take the training, and I will see you there.